What's going on, family? Welcome to another episode of Dominate the Decade podcast, Domination Conversation, where we bring to high-level individuals that are absolutely crushing it in their perspective, industry, and their space. And listen, this episode right here, listen, I need you, just do me a favor. Get your pen, get your pad, and I'm going to tell you, just try to keep up with what this man is about to say, because listen, I got one of the highest thought leaders in the funding space on today's podcast, my guy Dub Washington. He's gonna come break down the game from a funding perspective. Dub, how you feeling? Let them know who you are. What's going on, brother?
I'm blessed and highly favored, man. I'm at Dub Washington on all social media platforms, and I'm the guy who says that everybody eats, and I do one thing in particular. I make the banks compete to lend you money, brother.
Hold on, wait. You're gonna get on here talking crazy already. Most people say, listen, let me just get you some funding. Let me get you some money. Let me get you some money. But you just said you're going to make the banks compete to lend me money?
Absolutely.
So instead of me going out to them and asking and begging for money, they're going to come compete to lend. I need you to break that down. Make it make sense.
Most people are accustomed to reaching out or even applying online.
Yep.
But if we understand that banks operate off of deposits, a.k.a. fractional reserve lending, the more deposits that you have into an institution, you're going to have those private relationship managers reaching out to you based on your deposits. So whenever I say we make the banks compete to lend you money, we're taking our money, depositing it, or the bank's money, how we work, and deposit into different institutions. And based on those deposits, that's how they make money. So they make money off of lending other consumers deposits. The more deposit that you have into an institution, the more they're willing to give you because they have made more money off of you.
Okay, I need you to, so you broke it down, but I need you to break it, because you said most people think this way, but then this is the way we do it. So what way do most people think so that there's clarity and understanding?
I got you.
But then what is the way that you have people execute this strategy to make the banks lend them money to compete to do it that way? What, like, make it make sense.
Got you. So most people are accustomed to, I build up my credit score, which we know that credit score, the banks don't lend off of your credit score. They lend off of your profile.
Wait a minute. Now hold on. Now you're going to get the internet mad at you.
We about to listen.
So you saying the banks ain't lending money off my credit score?
Absolutely not. They're lending off of your profile. What does your borrowing behavior say about you?
Okay.
We can have an 800 with Kovo, Best Egg, Upstart, Upgrade.
You ain't said nothing wrong.
You see what I'm saying?
Talk to them.
We can have an 800 with that, but the banks are broken down into like tiers. I always equate it to this. Look at your profile as either your college transcript or your strength of schedule. We're going to show our age right here. We remember the BCS championship.
You talking too spicy right now. This is insane. We just get started. Go ahead,
cook. We just here.
Do your thing.
So whenever you have, let's say, strength of schedule, if you don't play anybody, you don't get credits for having an undefeated season. If you take electives all throughout college, that 4.0 is not the same as somebody who took AP classes.
I'm about to walk off this pod on you, boy.
Man, we about to cook, bro.
Come on now.
So we add, once again, tier 1 and tier 2 primaries to our profile. How do we do that? We go in and we build deposits with the tier 1 and tier 2 institutions. So whenever I say people go and they reach out to bankers and then they go and see, okay, what's the required credit score? That's really not what they're looking for. They're looking at staying power. What insinuates that you're going to have staying power? How many products do you have? What does your deposits look like? So that's what I mean whenever I say we do it different.
Wow. Okay, cool. So I need you to break this down. So if I'm watching this, I'm understanding that it's not basically, let's just say, my credit score, which is how the normal or the average individual is going out to funding. Then what does that strategy look like? What does data points look like? What is the proper sequence in order to go get, let's just say, max funding based upon how you do things?
Got you. So once again, we are accustomed to looking at the bureau that they pull from. We understand now that everything is based on deposits, but inside of that, banks are judging you off of what you have on your profile. If you have credit builders, in a sense, on your profile, they know, guess what? You were either rebuilding your profile or you just came out of credit repair. So you could have an 800 with multiple secondary builders on your profile. You're not lend worthy as someone who has, let's just say, a 650, but they got quality on their profile. So just look at it as AP classes.
Got you. That makes sense. So if I wanted to go out the funding right now, let's just say I got a 690. I'm talking about most of my accounts, real quality, high level. What is the proper funding strategy for me to execute right now? Like, what is there? Is it based on institutions? Is it based upon particular bureaus? Like, what is the way for me to go out to the proper funding strategy right now with a strong credit profile, 690, 700?
You got to determine what type of funding that you want.
Okay.
So we have business credit cards, we have business lines of credit, you have equipment financing, you have loans, which I don't recommend to get. So what I always tell my mentees and we tell our students is we go after 0% business credit cards. Or if you're in the process of building your personal profile, we know that we want our FICO 8 bank card score to be strong. FICO 8 bank card is completely different from your auto loan score or your mortgage score. So depending on the product that you're going for, that's going to dictate what institution you go for. Navy Federal offers business credit cards, but it's not 0%. Why would we ever go and get a 0%, or why would we ever go to Navy Federal, ask for a business credit card when we have Wells Fargo, PNC, Truist, many other institutions who's going to offer us that 0% phase?
All right. Two things we got to talk about it. You talked about FICO. There's nobody in the funding game that really touches on FICO. I need you to break down the difference in FICO so that way people understand like what you just broke down and because that might have went over a lot of people's head.
Absolutely. There's different versions of your FICO score. You have a FICO bank card score. You have a true FICO score, which is accumulated from payment history, utilization, age of account, so on and so forth. You also have a FICO auto loan score. How do you build out each individual one? Well, your FICO mortgage score, your FICO auto loan score is based on the quality of your installment lines. Your bank card score is based on the quality of your credit card accounts because it's a bank card score. So that's why we build out with quality comparables for each individual score. Most people look at my TransUnion is this, my Equifax is this. The bank is not looking at your TransUnion or Equifax. They're looking at a version of that bureau in a specific FICO score.
So let's just say if I got, if I'm going out the funding, but I already, let's just say, got a Discover card with 20,000 on it, maybe a Chase card with 10,000 on it. Does other banks and lenders look at me having those high limit credit cards already and comparable to what they're gonna give me, or does that not affect anything?
Yes, it does, depending on, once again, the quality of that comparable.
Okay.
So you could go out and get an Upstart for 50,000.
Yeah.
That's not gonna hold as much weight as a Chase for 50,000. By the way, we're not gonna just skip over the fact that you probably got the highest limit on the Chase card out here. Like, come on, man.
Maybe, I don't know. I don't know.
So
let me. I'm gonna pull up so that way we know I ain't know. You know what I'm saying?
Yeah, we know it's official, bro.
But my limit right now on my Chase, let me see here is, and you can tell the people, look, I'm gonna go show details. You see that down at the bottom.
Yes, sir. 120K.
120K on this one card.
On one card.
So let's just say if I got this 120K, if I go to other let's just say banks or whatever, are they gonna try to match this? Or what does that mean? If I got 120,000 line of credit on one credit card with Chase, what does that mean for all other lenders that I apply for? What does that mean?
You can use that as leverage. So you can go in, and we're gonna sound cocky when we do this, but if I go into an institution and you can't give me at least 100,000, I'm straight. Because I have the quality comparables to show my borrowing behavior, to show like, hey, I can manage this. So with that, you can have that as leverage for them to try to match that. But it's also depending on, we're gonna get spicy today, their maximum exposure. So Chase have a maximum exposure of about 250,000 between all products.
Okay.
Now, should you go for the 250? It depends on the documentation that you have. Anything over 150 is going to require documentation. Anything under that doesn't require documentation. So before you go out and try to obtain over 150,000 from Chase, if you don't have 1-year tax returns, it don't make sense to go for that. So a lot of people are going after more than they can chew.
That's good. Nah, you talking crazy. All right, so I got this 120. I want to go to, let's just say, Discover. I want to go to American Express. I want to go to another financial institution and see if I can get this. Do I go online to these other financial institutions, just do an app, or is there another process or another method that you know of that maybe I can take in order to ensure that I can get a comparable limit based upon what they gave me?
So to answer that question, it's depending on the institution.
Okay.
So you have to understand, and I kind of hit on this earlier about understanding the max exposure. We also got to understand product exposure.
Okay.
So whenever you go to Bank of America, we would never expect BOA to give us 120,000.
Correct.
If you get anywhere from 10 to 15,000 with Bank of America, based on data points, that's the average, and you should be happy with that. So knowing how lend heavy is the institution, what product do you specialize in? We don't go to Navy Federal for business credit cards, but for a personal auto loan, we're going to cook. For a business auto loan, we're going to go to Bank of America. So just knowing what product that they specialize in. Steph Curry's the three-point line, you closing out. Shaq at the three-point line, you going for the rebound.
Hey, I'm hoping that they understand what you're saying.
Come on, man.
Like, you making it make too much sense. Now, here's the question I have. We talk about max exposure, different products. How do I know what financial institution, what their max product is, or what's their lending power? Like, where can I go to see this kind of information, this kind of data, to know that before I just go and just apply, even if it's just pre-qual? Like, how can I know where do I need to go to in order to get the correct answers before I just go take the test?
Only on the DTD podcast will I ever drop this much.
Come on, talk to them.
So we got helpmebuildcredit.com. This would literally, they have an approval database to where you can go in and look at previous data points of people who has been approved previously to kind of dictate what you should expect from them. Also, my FICO forums, credit boards, credit pools, bank branch locator. All of these products or all of these resources will kind of tell you what type of lending climate that we're in and kind of like what to expect from each institution.
Yeah.
Because if you don't know, once again, you could be going to an institution just because they offer that personal credit card. That's not their specialty.
That's good. And I know you touched on one of the last things was bank branch locator. I'm very familiar with that site. Can you kind of give the people, if they go to bankbranchlocator.com, if they go there, what would that website tell them, and how can they leverage that to their advantage?
Okay, so bank branch locator, depositaccounts.com. These are resources and tools that we use to look at I got you right here, brother, the financial health of the institution. What dictates the financial health of the institution? Deposits. If the deposit ratio has decreased over the past 6-12 months, it shows that they can't lend out more money. If it has increased, you know that we want to go there. So you knowing what product do they specialize in, what's the product exposure, what's the max exposure. Now we go and look at deposit account, bank branch locator, look at the deposit ratio over the past 6 to 12 months. Oh, this is a financially healthy institution.
That's good.
Let me go build out a deposit with them and ask them for a bag in 90 days.
And I think that this is good because there's a lot of people who have, start to understand these type of funding strategies, and they start a funding business. And they're taking clients with a healthy credit score, credit profile, proper data points, the right structure, and they're taking them through these financial institutions, and they're getting paid to help these clients. And that's crazy because a lot of people say, well, it's crazy. Y'all try to charge people percentage to help them go get funding and all this, and they could have did that. They already got a good credit score. Well, hell, there's a realtor who took somebody to go buy a house that had a good credit score, and they got paid too. So what's the difference, right? So then when I think about it, my question that I would have for you when I think about stuff like that is, if a person is running a funding company and they run in a funded business, they get paid a percentage to help people go through this process. The strategies that you're giving them, to me, it sounds like that's the difference between a person getting approved for $10,000 or $50,000 or $5,000 and $60,000. So that means that's the difference between you making $500 and $10,000 or $5,000 and $15,000 on a client, because you understand these strategies and these concepts. So the question that I would have for you is, obviously, I know you guys run a funding company, right?
Yes.
And when you help clients, what do you say is roughly the average that you get a client back? And then what does the credit profile look like, and what does the data points look like to get that person that amount?
Got you. So it's going to greatly depend on the zip code and where they're applying from.
Come on now.
If the default rate for, let's just say 30331, 30326, if they have a high default rate on specific credit cards, or recently, they're going to kind of tighten down on the funding part.
Wait. So you saying if I live in a zip code, I got an 850, I got good primaries, good. I'm talking about good AUs. I'm solid. But because I live in a bad zip code and people around me in my neighborhood, down the street from me, my neighbors, they default on their lines of credit. That's affecting my approval odds and or my maximum exposure for the high type of limits that I'm getting on my credit cards when I walk into Chase down the street.
Come on. A lot of that going there. So to answer, and that's an extra dream for the DTD, man. But typical limits that you can kind of expect with a properly built out profile, anywhere from 50 to 100,000, right? But it is more about strategy. I get you to 50 to 100,000. I don't want you needing Metro 2 like you offer in the next year or so. So we want to build out the next round. If you get 100,000, let's set 15,000 to the side. Service money. Take the other 85,000. Let's go build some other banking relationships, because it only takes you 90 days to build out a confident deposit relationship. After the 90 days, the banks are ready to lend to you. Banks report earnings quarterly.
So if I get 100,000, I take 15,000 and play ball, do whatever I'm gonna do. Take the other 85,000 and go and deposit into other financial institutions to build relationships over 90 days. So that way they can report, let's just say, my deposits, and then now they're willing to give me money. So let's just say if I went out and I got let's say if I went to BOA, you said they normally get 10, 15,000. I get 3 credit cards with them, 0% APR, 15,000. I got 45. You saying take a percentage of that and go do what I'm gonna do. Let's just say 10 out of the 45, I take the other 35 because it's 0% APR, and I put it into, let's just say, Chase or Truist or whatever, and I build a relationship with them for 90 days. Cause I got maybe 9 months anyway.
You see what I'm saying?
I got 9 months of 0% APR, so I go put it in those institutions for 3 months, and now they report, so now they want to lend me money because I just deposited money into them accounts, is what you're saying.
And then not only do they want to give you money, but they give you access to the credit card being 9 months 0% APR. 12 months 0% APR. So you use 3 months to buy you an additional 9 months.
Wow.
So it's all about the building and structuring part. The banks has been leveraging us for so long. Why don't we leverage the bank? I ask people all the time, whenever you go and apply for a financial product, they're going to pull your credit score. When was the last time you pulled a bank's credit score?
Hey, look, we gonna have to cut the camera. My boy talking crazy right now. This is good. And I think that this is the information that people really need to know.
Yes.
You get most people on these pods, and he's like you said, they be like, all right, well, this credit score, you got this data points, you need no zero. It'd be like, bro, give me what I really need to hear. And that's why I said, like, you know what I'm saying, like, you're the only person that I've known online that actually breaks down the funding game the way that it need to be broken. And to me, it's really not a funding game. It's really like you giving away funding strategies. It's not the funding game. It's like people get a funding game all day.
Absolutely.
But funding strategy is crazy. When I know that my neighbor defaulted and that's going to affect me, that's insane. When I can go to a website and pull their financial report and see if they going to lend me money, not because I'm worthy of getting money lent, but are you capable of lending me money based upon your deposit ratio? That's crazy. Crazy.
Fractional reserve lending.
So now I want you to just briefly, so that way we make sure people really understand it. What does fractional reserve lending really mean?
Fractional reserve lending has been put in place ever since banking has existed. So what it is I take $100, I go and deposit it into a bank. Most people often look at banks as a holding institution. In our reality, it's a lending institution. That's how they make their money, off of interest from consumers' deposits.
Okay.
They're not lending out their own money. So what fractional reserve lending is it used to be that they only had to keep 10% in reserves. COVID came, and then the banks got greedy. The Fed lowered it to 0%. I want to say March 25th, 2020. They lowered the reserve ratio to 0%. So all of the reserves that they had holding on to, guess what they did? They lended it out and tried to charge interest on it. Then everybody defaulted. So that's what fractional reserve, in a sense, is what it is. It's like they're taking our money and lending it out and charging a spread on it.
Damn.
We got to understand how to play the game. So if we know that's how they make money, the more deposits that we have, the more that we are lend worthy in their eyes.
And so in essence, instead of only depending on the bank, we damn near to the point we become the bank too.
Absolutely.
That's good. What is one thing that you feel like I didn't ask you today that you want the world to know about Dub? Because listen, bro, when I call you and we talk, we have conversations, we be chopping it up. And I know you a dad, I know you married. Is there anything that, because it's like they listen to like, this dude is intelligent. But is there anything that I didn't get to ask you today that you want the world to know about you?
I got to go spiritual with it because I feel like, and you kind of instill a lot of different Godfidence. You're the first person that I heard say that. And I'm like, bro, it's rare that we get in this space and then seeing people as successful as you still give glory to really who deserve it all. I tell people, Deuteronomy 8:18, like we can go out here and grind and do all of these things, but it is him who's going to give us the knowledge, the ability to go out and get it. Yeah. So if it's one thing that I would want the viewers to know about me is like, first and foremost, it's God first. Yeah. You see what I'm saying? He told us to come here and multiply. Yeah. That's what we're doing with these deposits.
Yeah. That's good. That's so good. Listen, man, being somebody that is a man of God and being connected with you, what you don't realize and understand is that I'm a very observant person. And for years, I've watched people in this financial literacy space operate and move. And there are some people that do it the right way. They move with honor and integrity. And there's some people that just don't. And so for years, I'll tell you publicly that, you know, I've watched you and you've done it with integrity. You've loved on the people. You've done it the right way. And for that, man, you definitely deserve your flowers because there's a lot of people who just do it just to make the money. Yeah. You know, and it's like the way that you teach and the way that you talk is on a whole different level. And it's crazy because I was telling my brother this because he's in the funding space now too. And it's like, I'm like, bro, you gotta know what you're doing. Mm-hmm. Like, don't get into this to love, just to make money. Do this to like love on the people because the people hold the money anyway. So if you treat people how you want to be treated and you love on the people, the money gonna follow you anyway. You don't have to chase money. Let the money chase you. Just like you said. Don't try to go out there to get funding from the bank. Let the banks come to you to say, I want to compete to lend you money. It's the same thing when we talk about running a business and doing things the right way and moving with honor and integrity. And so you've done that. You've done that well. You've done it with class. You've done it with elegance. You've done it with grace. And so for me to you, bro, I want to give you your flowers because you've done it well. And not only just being a good business expert, but being a good father, being a good leader for your home, being a husband. And that's some stuff that people need to know and they need to acknowledge that. So for me to you, brother, listen, I give your flowers here on the DTD podcast, man. And it definitely was an honor and a privilege to be able to talk to you, to kind of get the right game and get the real strategies in real time that can help the people that's watching this. Because somebody is watching this pod, and I'm guaranteeing they're going to send you a DM. They're going to shout you out. They're going to say, Doug, bro, because of you, I've been able to do this. Like you said, you being fruitful and you multiplying. You didn't hold nothing back. You didn't gatekeep today. You kept the gate open. That's really what it's all about, bro. So, man, if you can, let the people know how they can find you. I know you said at the beginning, but I want to make sure that for somebody, if they missed it at the beginning, how can they find you? How can they tap in with you? And if you have anything coming up, any free class that they can join, how can they learn more and get more from Dub? Just let them know.
Man, at Dub Washington across all social media platforms. Each week, if you thought this was game, each week I come and I sit down and love on the people for about 2-3 hours. And I just give them different insight. I give you different perspective.
Bro, wait a minute. You sit down for 2-3 hours?
2 to 3 hours a week. Shout out to you for you gave me one play. Damn. And it 3x my business, bro. Before I joined you, I was doing well. Mm-hmm. You gave me one play, one strategy that 3x my business, bro.
I need you to get a people perspective and context. What's doing well? What does that look like monthly? Doing well is probably $30,000-$40,000 a month. And you 3 to 4x that? 3 to 4x that. So you're doing $100,000-$120,000 a month now? On average. From one play? From one play. All right, let's keep it real with the people. How much did you pay me? I paid you $20,000. $20,000 one time. And now you're making $120,000 a month forever. Forever. Congratulations. Just from getting on that show. Congratulations, you scammed me. Come on, man. and listen, the thing is, I don't even be liking to talk because people get blinded by the numbers. Yeah, for sure. And it's like, I try to get more value. For sure. Than I do anything. But here's why I ask. Mm-hmm. I don't ask it to impress people. I ask it to press upon people what's possible for them if they actually just go and do. Yes. I ain't trying to impress nobody. I want to press upon you what's possible. So it's not like, well, why you show your numbers? Why you do? I stop even showing online what I make. I just start showing what I spend. Come on. Because I want you to know, like, look at the sacrifice that I'm making. So if you want to be me, you got to make these sacrifices. So it's like also too, if you want to be Dub, then the smartest thing for you to do if you're watching this pod, why don't you just pay Dub, let him teach you the strategies that's making him $120,000 a month. You pay him one time, you will make the same money forever. It only makes sense. I'm just talking about what I'm talking about. Like if you want to learn how to make money, you go pay people that's making the money to teach you how to make money. This is how you make money, babies. It's as simple as that. Again, bro, I appreciate you for coming on the pod, flaming this joint up, really giving people the knowledge and information that they need, especially the people that are in the financial literacy, but more importantly, the funding space, because they needed this information. So listen, if y'all are watching this, if you tune in, you liked it, make sure you subscribe. But while you are focused on building a business, do me a favor, make sure that you build a business, build it big, but make sure you love on the people and keep God first while you're building it. This has been another episode of Dominate the Decade Podcast, Domination Conversations. Peace out.